slap you. Don Griffin is one. Hey everybody, welcome to another episode of Thrive Live. We're so happy you're deciding to spend at least a few minutes of your Tuesday afternoon with us. For those of you who are new to Thrive Live, this is a show we run on a weekly basis. We do it every Tuesday at 2 p.m. Central, right here on Thrive's YouTube channel. So while you're with us, if you haven't already, down below, hit that subscribe button, hit that little jingle bell over on the side. We can say jingle bells now, it's Christmas time. And that way you get notified anytime that we drop a new video or go live like we're doing right now. So very glad that you all joined in with us. Sitting here in the studio with me is our incoming CEO, Selene Kellum.
Oh, hello. Happy December.
Happy December indeed. You got your Christmas shopping done?
No, none.
No, none of it?
Not even a Christmas tree up.
Oh my goodness gracious.
I know. I'm that person.
We need to send some elves over to your house.
Yes.
Help you out. Well, we didn't come in here to talk about Christmas decor, but we did come to talk about just workflow, loan manufacturing process, because a lot of folks just think, oh, you're just taking a loan app and I send it in, you look over some documentation and you give me a thumbs up, you give me a thumbs down, and let me know what's what. There is so much more that goes into it. And Thrive's chief architect of our award-winning rockstar level loan manufacturing process is sitting right next to me. So Selene, I just want to kind of kick things off and just start from the concept of you've been with Thrive for a long time, about 15 years?
Yes.
All right. Well, in that time, you've been largely responsible with helping us get to the point that we're at today where we have incredibly fast turn times for our industry. So what would you say when you were kind of designing and redesigning and retooling, what was kind of your primary motivation for that you were looking to accomplish with our manufacturing process?
Basic, it's quality and efficiency, and I know that seems so elementary, but as I looked at a combination of the efficiencies in which our current teams were providing, but also then the quality that was going back to the consumer and then back to the partners, all was around the quality of the work that we were getting from start to finish, and with that also came with speed. So we went back down to the basics of saying, what is the requirement to be able to get a loan from start to finish, and really understanding that, and then making sure throughout the manufacturing process all the way, and we tend to want to look backwards and say, okay, what does it take to get a loan closed? And we work all the way to the front of how that consumer and borrower is interacted with and at what stage we're asking for this documentation. And it really came down to the fact that we wanted to ask for complete information and have that complete interview. And you hear that a lot of times in our industry, but whether or not the tools, the expectations, the training, and all those things are set throughout that manufacturing process was really where I feel like people miss the mark, and it's the execution of that. Right. And sometimes we even hear that with sales tools and strategies. Everybody says you can have the tools and you can have the strategies, but it's the actual execution of those. Right. And so realistically, as we started redefining what those roles were, what we needed from a consumer, what we needed from the partners, doing a really good job of setting those expectations and then building around technology, communication, and all those things around it, what we ultimately ended up picking up was a lot of speed. Right. And when I started this process back in 2014, we were averaging, I think, almost 40-something days in closings. And I'm like, this is crazy. Needless to say, in a course of a couple years, we were able to get that down to about a 2-week closing, which was really impressive. And it was something that was important, not just to be able to show our teams that we can close loans fast, but it was about that quality and speed and service that we wanted to be able to provide to our borrowers, but also to all of our partners that we do business with as well.
In our industry, in the real estate industry, most people's expectation, especially kind of the uninitiated, the first-time home buyer, if they just all they have is anecdotal evidence to go on, or the stories of friends and family members who have done it, their typical expectation is that it's going to take around 30 days, and more or less. Thrive, we beat that by a pretty good margin. And so you and I were chatting before the call, that we have as a company, we've got a stated goal of getting our turn time down to how many days?
A 2-week closing. I mean, we want to be able to execute a 2-week closing consistently. And the beautiful thing is some of those mean it's happening sooner. I love seeing the post when somebody's talking about the fact that we can get from start to finish in 7 days, because that's legally what we can do.
Right.
But be able to see that we can provide that service. And the crazy thing is a lot of times that's a result of somebody else not able to close the loan or a bad experience. And so they're coming to us, and whether it's the options with the products that we're providing to them, or truly because there was challenges that they were having throughout the manufacturing process, be able to come in and be able to meet that closing date for them, and be able to provide that as a service to obviously our borrowers, but also to our partners. That's been something that's been very meaningful for our sales teams.
What do you think is the benefit to the consumer to being able to close that fast? I mean, obviously there's a lot of moving parts whenever you're purchasing a new home. So what's the benefit to the consumer in us really driving to push that through that fast?
I mean, I think there is benefits to the consumer in terms of speed to close, and a lot of that's just because buying a home, and I would say probably more so the purchase market, which is our focus and always has been our focus, is about just the anxiety that people have in this process. It's up there with getting married, getting divorced, moving, all of those things, having children. And so I think the important piece of it is building, getting them start to finish as quickly as possible. But I think realistically, it wasn't all about the speed. It was about the service and the experience for the consumer. That was something that we had in mind. The speed just came with the quality. That was the beautiful thing. And we wanted to make sure that our borrower had a way to be able to interact and be able to get information to us, be able to provide documentation in a way that was going to be a great experience, but also allows us to gain that quality of application to where there are no surprises, or if we can have those proactive conversations with that consumer to set that realistic expectation, that's happening earlier in the process versus having that tough call potentially, or a challenging call that we're having to contend with later in the process. And those happen in our industry as well as in this process. And so be able to identify that and mitigate those or reduce those as much as possible. That was the important piece of it, was all about the experience to the consumer. So the fact that the speed comes, sometimes they're like, we're not ready to close. You have a lot of sellers aren't ready to, execute that. They don't want to have the lease back in that. So it was more so about the experience, I think, to the consumer than anybody or anything.
That's really cool. Because we've always had as kind of our mission is enhancing the consumer experience and providing our clients with a legendary lending experience. So that just fits very nicely into what we do. As a component of, now I know this as an insider to the company, but share with our audience, what role does automation and AI play in this? Because the banking industry and financial services in particular is notoriously behind the times when it comes to adopting technology and advancing technology. We've seen that change a little bit over the last few years, but we were kind of on the forefront of adopting technology and using automation to make the process smoother.
Yeah, we were just kind of reflecting back at the Christmas party when we went paperless, and that seems so long ago.
It really does.
But the fact that we actually used to take paper apps and have people physically sign and fax in documents, and I remember going through that transition, over a decade ago, and now here we are talking about e-closings and full remote online notaries, and now we're actually working on focusing on what I would call as our staffing for tomorrow. One of the things that's really important, I think, as a business owner and part of just providing that great quality of service and speed to delivery is making sure that we have the capacity to be able to flex. And that was something that we saw a lot of, I think our industry saw in 2020 as well as in 2021, is the ability to increase your capacity very rapidly. And that was a struggle this industry had. I don't know about you, but I was closing loans in 2020. So, I think part of that is not not, I think sometimes the focus becomes on cost. It's never been our intention. That is some of the result of automation, is you get some return on investment there, but it's truly about the ability to add capacity and do it quickly. The other beautiful thing that I think a lot of people don't anticipate with automation is automation, if done right, is for those menial, mundane administrative tasks. It's something truly, if I could write down and write logics to it, it allows me to say, that's a task that I don't need somebody that understands the inner workings of certain things to be able to make a decision or to be able to analyze something, to be able to decide this needs to be done as a result of it. That's where we want to save your time, my time, and our others' time to really be able to apply that kind of thinking towards. So if we can identify the right task, then it produces quality. We have the same task that's happening every time, no matter what. That's the beautiful thing about automation.
Right.
The quality is consistent.
Yeah.
So I think all of it is back in line with what we've talked about, quality, efficiency, and the speed to deliver. It doesn't change the fact that we want our thrivers to be able to provide that great service, whether it's to our builders, to our realtor partners, or to our borrowers, but being able to add back capacity in their day with automation is something that really allows us to be smarter as we look into the future.
Well, it's like the conversations back when we first launched e-closings with a remote online notary, as you alluded to a second ago. I don't think that I've had a single closing for any client that I've worked with where they actually put pen to paper in like 3 years. And everything that my clients experience, like I am pushing hard on, you really want to do an e-closing. And we were one of the first, or we were the first in the state of Texas
to do a full run.
And then we were one of the first to do an FHA full run just a couple of years ago. So that is just an example of, or one example of a lot of that automation that has taken over some of the more mundane routine elements of doing this.
And to me, that technology is, going back to the consumer experience, not everybody that's going to be the right fit for them, but at the end of the day, I don't want to drive an hour across town. It's not that I don't want to, I don't have the time to.
Right.
I don't have a Christmas tree up, remember?
Right.
So it comes down to the experience and the fact that a remote online notary can be available to a consumer 24 hours a day, 6 days a week. The fact that I can do that within my time frame and my schedule. Oh, and by the way, my spouse can do that in a different time frame, and it allows us to be able to keep up with our tasks and responsibilities of our day to day, and not have to actually go back to the old traditional way. Not to say that isn't potentially a need and a fit for some, but for people like myself that really are looking for that efficiency and that speed, that's where I would think those type of technology and those enhancements continue to add value to our organization as well as to our industry.
Absolutely right. I mean, and what's really fun is when the people that it's most impacting, that they have that light bulb aha moment where, because like with Ron's in particular, title agents were kind of scared about it. It was like, you're replacing us. And we're like, no, we're not. We're making you more efficient. Would you? And then the question that you'd ultimately ask them is, okay, would you rather do 1 closing per hour or 4?
Well, we as human beings, I think, always resist change. And there was a little bit of that, and we were very much a part of the education, and that's a lot of it, is just educating those around you. And when we were on the path of e-close and even Ron's, and we were going into other states ahead of even the remote online notary bill being passed in some of those states, we got to ask a lot of those questions. But the reality is we're trying to provide enhancements that this world is ready for. I mean, we can click and buy our Christmas gifts now. Why can't we offer this as a remote online notary, or even the experiences that our consumers are having from start all the way to your point and finish? We should have the same expectations for our industry and for our financial institutions as well.
Well, we've had a couple of questions come in. We'll get to the questions in just a second, but I want to talk about like kind of what you see as far as the way forward. What other improvements are there yet to be made in our process? I mean, we're always looking to get better at what we do. What are some of the things that really excite you when you think about going into next year and years beyond?
Well, I feel compelled to at least bring up what's the foundation of Thrive, and the foundation of Thrive is our people.
Yeah.
So we talk about technology, we talk about all these tools, we talk about all these things, but the reality is the foundation of all of it is just having humble, hungry, and smart. Attract the right people to thrive. It's the ability to really focus on what's going to be the needs for the future. I know as we talk about marketing, there's a lot of changes that are happening in how consumers are wanting to go find that right application and that right product and that right lender to do business with. So we're having to constantly modify our business to be able to make sure that we're relevant out there to how consumers are getting that information.
Right.
We got the Alexas, we got the Googles, we have all those different things. So I think it's constantly looking at just the technology that we're providing to our consumers, to our partners. Some of that always is making sure that we have always options. That's something that's really important for us. We want to make sure that if a consumer has a unique need, whether it's non-QM or reverse, that we can provide that product to them. And that's been something that's always been important to us, because if we have to refer that business out, I can't control the quality and the service and the speed in which that consumer is having. So it's really important to us to continue to be relevant in terms of products.
Right.
Obviously, we've got to be competitive in rate, but we're going to always be looking at taking our technology and our process enhancements to the next level. I don't know what's next. I would anticipate a lot of it has to do with, IDP, which is intelligent document processing, and OCR, which is, a lot of technology words, but it allows us to be able to process information and data a lot more quickly. But going back to the importance of automation, it really comes down to not just the quickness, the cost, but it really has to do with the quality in which that we're providing that information.
Right. Great stuff. And if you are in the industry and you want to work with a very tech forward company, then we're a little bit biased here on Thrive Life, but you really need to look no further than Thrive. And if you're a consumer, we invite you to go to our website, go to thrivemortgage.com. If getting a mortgage, whether it's you're looking in the refi, or maybe looking at reverse, or looking to do a purchase, maybe you're looking to move up or move down, or just change your location, we would love to visit with you and love to show you firsthand why we believe that we're the best at what we do. And so go to thrivemortgage.com. You can connect with a loan officer that's in your area directly. Go to the loan officer directory and just type in your locale where you happen to be. We got people all over the country and in various different markets. So just go check that out. But let's jump into a couple of the questions that got asked. Peter's asking the question: do legal closing times change from state to state? I think he's referencing back to something we said at the very beginning when you were talking about how we're required to take at least 7 days. Does that change state by state, or is that a federal thing?
No, that's a requirement. I mean, obviously we can't app and close a loan any sooner. So that's not necessarily state. What I would say is maybe what he's also referring to is if there are any additional review requirements. Obviously, right. California, some of your other states do have different requirements as it relates to the actual closing documents.
Right.
So those are all taken into consideration. A lot of times those things as it relates to a RON, a remote online notary, or an e-note, which is an e-closing, those would be considered in the review process before a closer or a borrower potentially even shows up to the experience. The
experience, yep.
Yeah.
So Peter, that would definitely be a good question to ask your loan officer that you're working with in your state, whether they're with Thrive or not. They should know the answer to that of what's typical for your particular market area. Next question that was asked: is there anything I can do ahead of time to prepare for buying a house that will help the process go smoother or faster? That is a question every consumer should ask. And it's also a question that every loan officer should have a ready answer for. So what would be your answer?
Pre-approval. Start the process with a consumer or with a loan professional immediately.
Right.
And the best way to be prepared into it is to know exactly what you're getting into. We can provide what's called a to be determined. So even while you're out there shopping, maybe you're not even shopping yet, we can do a credit review where we can look at your qualification statuses. We can actually go in and give you a pre-approval up to a certain amount. And as you then decide to start shopping out there, you partner partner with a realtor, then a realtor knows kind of what your budget is at that time, and you already know that you've got a credit qualifying pre-approval at that time. So that's the best way I would say is partner with actually a loan professional before you go to shop. That's the easiest way of being prepared for it.
Absolutely, absolutely. I mean, and everybody's financial situation is unique to them and to what they do. So, if you're talking about any of the stages prior to submitting that application, it's really gonna. I mean, the bottom line is what Selene was saying is reach out to a loan officer, preferably one with Thrive, and just strike up a conversation. Say, look, this is something that we're thinking about doing. The right kind of professional in the mortgage industry that you should be working with is not somebody who's going to take that information and then start just spamming the heck out of you and trying to strong arm you into actually going through with it before you're ready. They're going to be taking on that advisor role and really working with you to make sure that you're properly prepared.
And I'd like to expand on that because I maybe as a consumer wouldn't understand what that means and
Sure.
why I use the term loan professional, because I think this is important. And you also use the term advisor. A lot of times as we're looking at your qualification status, it's not just your standard, okay, what do I need to put down? You know, a lot of people think I have to have 20% down, or maybe you do have 20% down, and maybe that is what you're able to bring to the table. But a loan professional and an advisor is going to look at your entire financial situation and make recommendations in what they see. So that might say, as they tell you, don't put 20% down, they might look at other options for you to maybe potentially pay off some credit card debt or some student loans that have some higher interest rates. And they're going to look at your overall situation and put you in a better financial situation versus just saying, let's just put you in a home. So that's where I would say it's important to pick the right loan professional and find somebody that's truly going to advise you for your overall needs and your best financial situation.
Absolutely. You know, I think we got one more question that I think is a great one for us to finish up on, and that is, what if my realtor wants me to go with a different lender? So I'm making an assumption here, but it sounds like, let's say that they start working with one lender, get pre-approved, start working with the realtor, and then the realtor says, no, you need to go with this lender over here. What would be your response to that consumer?
Well, a couple things that tend to show up as surprises. Sometimes there are things that people will tell you, and let's just say there's maybe fees and certain incentives, but sometimes if you really were to get down to the nit and gritty of it, there are sometimes things that you want to pay attention to, whether that's in that loan estimate or that final closing disclosure. But I think the most important thing is this is, as I said, one of the most can be one of the most important financial decisions you make. One of the top three can also be a very time full of anxiety because you don't know, this is a big financial decision you're making. I would not make that without checking on who I'm doing business with. No different than you're going to buy a car or buy something on Amazon. What do? We look at reviews. We pay attention to, what the other consumers are saying. And I think that's the important piece, is having the comfort of knowing that you're working with a loan professional, somebody that's going to really be alongside of you, making sure that they're putting you in something that truly is going to be best for you and what the needs are for you and your family. But I think also being in it in terms of setting the expectations, providing that good platform that we talked about that provides that great experience, that fast closing, and going to be able to provide that quality and service.
Absolutely right. I mean, there's really a couple ways that you can go about answering that question. That was a brilliant answer. And the bottom line, when it comes to if you are dealing with somebody that's a party to the transaction who's saying, no, you really should go with option B, then it's incumbent on you, the consumer, to make sure that you are doing what's in your best interest, what you feel you are most comfortable with, because you can take that question one of two ways. You can take it a positive way or a negative way. The negative way is they're trying to steer you to their college roommate that kind of does loans on the side, might be willing to give a little something under the table. That's the bad reason to switch. A good reason is maybe this realtor is truly looking out for your best interest, and maybe the company that you started with, they might not have the best reputation in town, or maybe it's a call center or consumer direct lender, no offense to call centers, but maybe it's not a local representative that you need to be doing with who knows the market, knows the ins and outs, and is somebody that is like right down the street that you can go sit down and have a face-to-face conversation with them. So it's really going to depend on what your particular situation is and what you're looking to do, as well as bottom line is you need to do business with who you're, to Selene's point, you need to do business with who you are most comfortable doing business with. So just be smart and don't ever be afraid to ask questions. One of the surest signs that you're working with the wrong type of industry professional is if you ask questions and they start getting frustrated with you and impatient, and that's a red flag right there. So make sure that you're taking precautions on protecting yourself, because as Selene mentioned, this is a huge investment on your part. So.
And be educated. I think that's the main thing is anytime that you make these type of decisions, be educated, know what you're getting yourself into, know who you're working with. I think that's the important piece, no different than we would do for ourselves.
Absolutely right. Well, we're going to go ahead and wrap things up. Selene, thank you so much for spending time with us today.
Thanks for having me.
Absolutely. Excited.
Happy holidays,
Happy
guys.
holidays indeed. So Selene, I introduced her as the incoming CEO. That transition becomes official January 1?
January 1.
January 1.
2023.
All right. So we'll
super excited to represent Thrive.
All right. We'll start calling you Your Highness in January.
I don't know about that. Thank you for tuning in.
All right. Bye, guys. Y'all have a great rest of your day, and we'll see you next week.